Hello viewers, welcome back to my channel. I am Neha Paryani, and in this session we are going to discuss about another topic from income tax subject, that is heads of income. So this is an important topic. It forms as a base to understand the subject. In our previous videos we have already discussed few other topics from income tax. If you want, you can get its link in the description box below, also at the end of this video. So you can check it out. Today we are discussing about heads of income, which could also be called as sources of income of a person. So heads or sources of income basically means that all the different areas or all the different sector from where a person can possibly earn the income. All those different sectors will be called as the heads of income. So these are defined as per the Income Tax Act of India. So our act defines the income into 5 heads or 5 categories, we can say. First head is income from salary. Next, income from property. So income from house property. Next is income from business or profession. Fourth is income from capital gains. And the last head of income is income from other sources. So our act classifies the income into these 5 heads. It says that a person can possibly earn income from these 5 heads. And it is not necessary that a person is having income from a single source. A person can earn income from multiple sources also. Like a person, there is a salaried person, he is getting income from salary. Along with it, he might be owning some of the property. So he could be getting the income from house property also. Okay, and he might be getting income from various other sources as well. So the combination of all the incomes that he's earning, the total of that income will be taxable. Okay, so these are the 5 main heads of income. So we'll be discussing about each of the head in detail, because there are various other rules and regulations, different clauses for each head. So we'll be discussing them in detail one by one. Our first head of income is income from salary. So it means if a person is getting in the form of any salary, suppose there is an employer and employee relationship. Okay, if a person is working for someone or if he's working for somebody else, then he will be getting income in the form of salary. The person or the owner for whom he is working will be called as employer. So this employer will be providing income to the employee in the form of salary. Basically, employer will be providing salary to his employee. So this employee income will be treated as income from salaries. Okay, and that will be taxable. So what does the term salaries include? Okay, so it includes the basic salary or the basic pay, which we can say that he's getting in the form of salary. But in many cases, not only basic pay, an employee will be getting some other benefits also, some extra amount in the form of other benefits also. That will also be treated as income from salary. So for example, along with the basic pay, if he is receiving any perquisites, if he is receiving any amount in the form of gratuity, if he is receiving any amount in the form of retirement benefits, any pension amount, so all these things will also be included. They'll also be treated as income from salary. The total of all these will be treated as the income from salary. But there are certain deductions also. Okay, so these deductions will be not considered as income from salary and they will not be taxable. For example, any medical benefits of a employee. So if the medical benefits are less than 15,000 rupees per annum, they will not be considered as income from salary. They will be treated as a deduction. The person do not have to pay any tax on these medical benefits if they are less than 15,000 rupees per annum. Similarly, so if the person is having any conveyance allowances, so they are also deducted. And if he is getting any leave traveling allowances, so they are also not taxable. They are also not taxable 2 times in 4 years. So in 4 years, if a person is going on a holiday and if he's getting any traveling allowances for that, so in 4 years, 2 times such allowances are not taxable. So all these are deductions, but other than that, whatever basic salary is getting, if he's getting any perk besides any leave encashments, any gratuity, okay, any pension amount, all these will be considered as income from salary of a person. So suppose that the total of all these, if his basic salary is rupees 30,000 and all the other benefits are of rupees 15,000, so 45,000 per month will be considered as income from salary of a person. Clear? Our second head of income is income from house property. So it means that if a person is earning any income from a property owned by him, then that will be called as income from house property. Okay, so there is a condition that the taxpayer must be the owner of such property. Okay, now there could be two types of properties actually. So one we call it as self-occupied property, or we can say SOP. And another one will be considered as LOP, that is let out property. Okay, suppose there is a person, he is owning multiple properties. So one among them he will be using it for his own purpose, for residential purpose. The property which is used by the owner itself for residential purpose, okay, that will be called as self-occupied property. That will not be taxable, will not pay any tax on such property. Okay, and if he's owning multiple properties, and definitely other properties must be considered, he must have let out such properties on rental basis. He must have given such properties on rental basis where others are staying and using the property. Such properties will call it as let out properties, and the owner will be receiving rent from these properties. Okay, so this rent will be taxable, right? So this rent will be taxable. So the rent, the income that the person is getting in the form of rent by letting out the properties, that we call it as income from house property. Okay. Our third head of income is income from business or profession. So if a person is involved into some kind of business, it could be a trading concern, it could be a trading business, it could be a manufacturing business, it could be a logistic business, it could be a distribution related business, it could be a hotel business or restaurant business. So it could be any type of business. If a person is earning any profits out of the business, that income will be called as income from business, and that is a taxable. Okay, and then if a person is any professional, so income from profession, suppose the taxpayer is a doctor, by profession he is a lawyer, he is a teacher. Okay, So whatever the fees he is collecting for providing the professional services to public, that income, that fees will be called as is income from profession. Okay, and this is also taxable, right? So the profits that a person is earning from business, or the fees or the income that is generating by providing the services to the people, both are taxable. But all the expenses whichever are incurred for carrying out the business or profession, such expenses will be deducted, and the net amount will be taxable. The net amount from income or from business or profession will be taxable. For suppose like a person is earning profits of rupees 5 lakh in an year, okay, and he has incurred expenses of rupees 1,50,000 for conducting the business. So that 1,50,000 rupees will be deducted. So 3,50,000 rupees will be taxable as income from business or profession of that person. Our fourth head of income is income from capital gains. So it means that the income that we receive by selling our capital assets, selling of capital assets, or we can say any property. Okay. Yes. So now these capital assets could be of long-term capital assets, or it could be of short-term. So it could be short-term capital assets. So if a person is owning some property, for example, take as land. So if a person is the owner of a land from previous 20 years, and now he is going to sell this land. Okay, now he's going to sell this land. And by selling this land, the person is earning income of rupees 20 lakhs. So this income will be called as a long-term capital gain of a person, and this will be taxable. Okay, so examples of long-term capital gains could be selling of a land, selling of a building, or you can say selling of a vehicle. Okay, the assets which are held by the owner for a very long time or more than 1 year. So such assets will be called as long-term assets. And if such assets are sold and any income is gained by selling such assets, we call it as income from capital gains. Now, if we talk about the short-term assets, so short-term assets, which means a person is holding them for less than an year, right? So examples could be any company's shares, any fixed deposits. Okay, if the person is selling the shares which he purchased within a time period of 1 year, and if he is earning an income out of it, that will be called as short-term capital gain. Okay, and if he is if his fixed deposits are maturing within 1 year, if he is taking FDs for 3 months, 6 months, 9 months, or an year also, then they will be called as short-term assets. And if these assets are sold, or if a person is getting any income out of selling these assets, that will be called as short-term capital gains. Okay, basically capital gains means income earned by selling some of the property. It could be long-term or it could be of short-term. So both the income, it could be long-term or short-term, both are taxable as per the Income Tax Act. Our last head of income is income from other sources. So basically this head includes all the income which is not included in above 4 heads. Okay, which is not included in any of the above 4 heads that we have already discussed. So examples of other sources could be like the interest that we get on bank deposits, okay, or the amount that we win from lotteries, the amount that we win from gambling, okay, the amount that we win from horse race, Okay, so all these will be treated as income from other sources. There are various other examples also. Basically, if a person is earning any income which cannot be classified under the four heads, then that will be considered as income from other sources. But we need to remember that a person earning any income is taxable in India. Okay, and so even though the things like lottery, gambling, horse racing are illegal, but still if some person is performing these activities and if he's earning the income, they will be taxed as per the Income Tax Act. Okay, so the income that a person is earning from all the multiple heads, okay, the total of such income will be called as a gross total income of a person, and that will be taxable here. So this was all about today. This was all about the all five heads of income of a person, which are defined as per our Income Tax Act. So in our next class, we are going to discuss about a few another topics from the subject. We are also going to do the numerical problems, okay, relating to the subject. So if you like this video, please hit the like button. Also subscribe to the channel, share the video with your friends. You can ask me any doubts in the comment section below. I hope to see you all in my next session. Thanks for watching. Till that, keep learning.